morning, good afternoon, and good evening to all of you. Happy May Day to each and every one of you, and welcome to the next edition of the Smoking Barrel. I'm
Yeah,
Rustin Edwards, currently up in Antwerp with my illustrious co-host, Mr. Matt Stanley in Dubai.
it's been a while. I've forgotten how to do this.
Hey, that's what happens when you have a little bit of holiday, a little bit of illness, and then more holiday, and then more travel.
Yeah, yeah, all
What?
of the above. It's been Eid. Our producer has been off. It has been um Eid, and you've been off, and then I've been traveling, and then yeah, it's just I feel like I said to myself this morning on my commentary, is it May? It bloody is May, isn't it?
It is May Day. May Day. We're not talking about a plane crashing, although that's what, if you're trading Brent this morning, you might be thinking that the plane is crashing. Uh,
Yeah.
Down on the day, down a buck 35 at 94.96, sitting on a nice level of support, which could see it break down further to 81.30 or so if it happens to trouble through there with some volume.
Yeah, I mean, look, it's funny, isn't it? Because um UAE petrol prices are announced to the at last day of each month. The UAE government come out and say the price at the pump will be this for the next month, and the last 4 months it's increased. It went up yesterday as well, so the price of regular gasoline went up 6%. Um,
So what is it now? Like 3 cents a gallon?
yeah,
Four
not even
cents a
that.
gallon?
Yeah, yeah, not even that. No, it's still what is it? Three dirhams, about just under $1 a liter, something like that. So it's cheap. Don't get me wrong, but it's still. I think it's gone up so far this year around 15%, something like that, just in the last 4 months.
Wow.
But if you if you look at it, Brent recently. I mean, I kind of just get my commentary up from this morning. If you look at it in the prism of where Brent has been so far this year, end January settled at 81.71, February 83.62, March 87.48, and April yesterday 87.86. We're at 84.88 now. I mean, look, I mean, I'm not being flippant, but if you're OPEC, they haven't got a meeting this month. They had one last month, didn't do anything. Going to have a big meeting in June, see what happened because obviously summer demand season, what's going to happen with their oil, etc. Um, between 81 and 88, really, I'll say 81 and 90, and it has been a volatile year. There's been a lot in the news, but oil prices have been remarkably steady.
Yes, it has been. I mean, but that's what you want to have if you're an OPEC. You don't want to have the hyper volatility. You want to have a steady state so you can have a fixed set of revenues against your cost structure.
Yeah,
And I think that actually suits a lot of people to have a relatively benign crude oil market. The thing that's been more dramatic, I think, is on the product side, especially when you looked at the product cracks of how much they've come off here recently. And it is putting a lot of refining margins into question about where they can produce and what they're going to produce. Story out earlier that there was, Chinese refining margins inland were getting closer and closer to negative, and they wanted to export more product to the market, but the PRC government was not willing to give more export quota. So you do have those two dynamics where the product market is now more reflective of the actual demand, and the crude is just kind of mulling along and not really doing much at this point.
yeah. I mean, yeah, exactly. No, nowhere more is that profound in what's happened with the ice gas oil crack, which yesterday was around, I think, just about $16 a barrel. Now, let's go back to, I don't know, let's go back um,
You
middle
just
of
go
May.
back a month, and it was almost 30.
Yeah, if I go back, this is the middle of April. Um, $20. It was $21 in middle of April. So in 2 weeks, it's come off, 20%. I can go back further, but I don't want to bore you. But you can see it's been a slow and steady decline. I mean, with the Russian drone strikes, what's happening there, what's happening, globally with diesel demand, which has been holding up all right. I'm quite surprised that gas oil cracks in Q2 have become so weak.
Well, you are coming out of the winter heating oil season in Europe and in the United States, so you do have a bit of that, but you still also have weak overall industrial demand in Europe.
Yeah.
I mean, if you just take a look at the price of carbon is sitting around $69 or 69 euros a metric ton. Nat gas is not really doing much either when it comes to its price value into the energy space. So it tells you that there's not a lot of industrial demand for the goods, and we'll see what happens when vacation time starts to pick up here in Europe. How much on-road diesel demand picks up or not. But it always, to me, it always harkens back to the energy efficiency increasing on all new automobiles, and energy replacement that's been going on steadily and continues going on today.
Yeah, I mean, we wrote something yesterday about India. We've upped our forecast on Indian growth to 7% from 6.3%.
You and
Now,
the IMF.
yeah, that's what we're kind of looking at. But if you look at diesel demand, it's picked up. Indian diesel demand has done well, but it's still 6% below pre-pandemic. And
Yep.
gasoline is similar in India, and we don't actually see gasoline demand ever returning to pre-pandemic levels.
No.
Now, the split into the sort of product consumption basket in India is about 60% diesel, 30% gasoline, and then LPG and others, etc., make up the rest. But you know, it's a good barometer for mobility, which is what my colleague Reed goes into when it comes to gasoline consumption and demand in India. But look, like we've been sort of harping on for the last, well, we've been spoken for a while, but before that, week in, week out, India are still, Russia were India's biggest supplier of crude oil last month, took over Saudi, took over Iraq. Um, you know, that must be adding, and it must, the IMF, I don't know if they touched on it, the fact that India are allowed to buy Russian energy, which is fueling the vast, quite a sizable portion of that growth, because it is so much cheaper. It's not price cap stuff.
Well, I mean that is the underlying. I think that's the underlying support to the whole Indian economy is that you get access to cheap energy and you can do a lot. And that does give India a very significant advantage when it comes to growth, because the cost of their inland energy is far cheaper than other competing nations around the world. I mean, India and China, you know, typically both have that same advantage. However, India's got probably a lot more to do than China does, just because they have a larger population that is trying to shift up into the middle class, into the upper middle class, versus where China probably has already made that shift, and that's why people are refocusing their growth story from Asia, from a Chinese story to an Indian story.
Yeah, I mean, do you think that? I mean, that's a good point because Chinese growth story, obviously, when they had their assembly in January, the growth, the basket had been sort of moved, or the range between what 5 and 5.5% each year, which is still a lot higher than most European economies for sure, apart from the odd sort of outlier. But India, being the world's most populous country, like you said, 7%, there is that sort of, they are looking over each other's shoulder to see, okay, well, how are India doing, or how are China doing? India, by far and away, are moving on quicker than China seems to be. Do you think this is a sort of symptom of the hangover that China can't get rid of at the moment, which is the property sector? It's
Well,
just something they can't shrug off, right?
I think the issue you end up with is that China is still a government-centric controlled economy. The government makes a lot of decisions on what the economy is going to do and how it's going to be done. Where India is a bit more westernized in its economic mindset. So you do have a lot more, I would say, capitalistic type of mindset. So you can actually do things a bit quicker in India than you can in China. So my opinion is that with an entrepreneurial mindset, India can probably drive growth quicker and do things quicker, and they'll have price discovery quicker, as well as any type of fallout will happen quicker than it will happen in China. So I think gives India a big advantage. That's why I think they can achieve a higher growth rate than what China could achieve.
Yeah, yeah. It's an interesting one, isn't it? Because I think the story came out this morning was India buys more Russian. From trade flow tracking agencies, Kepler show. There you go. But India's India raised their crude purchases in April by around 15% compared to previous months. Its imports from Iraq declined by 20%. I mean, that's a significant amount of oil that India are able to sort of swing on a monthly basis that does disrupt global balances,
Well,
right?
but India is a 5.6 million barrel per day refining system. I mean, that's what they have for refining capacity, and they haven't built any real new refineries in India for a while.
Mm.
So, yeah, can they flip those switches around? Yes, they can, because those refineries are the Reliance. You have IOC, Bharat Oil Company, Hindustan Oil Company. So they can flip those switches as to where they procure their crude from rather quickly. And you got to remember, Bahrain and Russian oil into India is relatively short haul crude. When you think of
Iraqi, you
transit,
mean?
Iraqi, sorry,
Yeah,
Iraqi and Russian crude is short haul crude into India
yeah.
in relative terms versus China, where it's long haul crude. Um, so that does again give them that ability. They can flip those switches rather quickly and not really overburden their system with what's been purchased before and arriving. So they can actually have a much quicker margin reaction,
Yeah.
i.e., if they need more distillate, they can quickly flip to a more distillate rich short haul crude versus a gasoline rich short haul crude and meet their market needs and thus help facilitate any issues that they could have with oversupply or undersupply meeting demand.
I mean, how is it in the world of shipping? Has it been? I mean, we wrote Matt, our brilliant freight analyst, wrote his Tankers Monthly. It seemed, I mean, a similar story, pretty steady, down maybe a little bit in April, but still a good news story if you're in the shipping business.
If you're in the tanker business, I think you're doing all right. I mean, freight rates have been holding very nicely. Anywhere between 40 to 50,000 a day on a TCE equivalent for your Suezmaxes, your VLCCs. So demand for crude freight has been pretty good.
Yeah.
Clean product freight has also been supportive. I think the big story has always been Aframaxes for the last couple of months. Aframaxes are seeing a nice little move upward, and I think part of that's being driven by the startup of the TMX pipeline exports out of Vancouver,
Yeah.
which is going to be exporting 500,000 barrels a day of Canadian heavy.
Yeah,
Uh,
which actually Reliance just bought a couple of cargoes.
yes, and I think PetroChina and Sinopec have also bought cargoes. But the big logistics bottleneck you have there is that in the port of Vancouver, you can only get an Aframax in.
Yes. Now I wanted to ask you this because when it comes to what we are showing, so let's say, for example, you wanted to look at crude exports from Vancouver into India, it would show nothing because
Nothing
the
started yet.
it no, because you have to ship it in a certain location offshore, say on a VLCC. I think it'd be four cargoes, wouldn't it, that come out of TMX?
Well, to do a VLCC, yeah,
Yeah.
you need to do 4 lighterage operations,
Okay.
or to do a Suezmax, you need to do 2. Um,
Okay.
and my guess they'd probably do Suezmaxes, not VLCCs, just because there's a relatively good pool of Suezmax ships on the west coast of Asia or west coast of United States and South America, where VLCCs aren't as prevalent because it's a bit harder to discharge VLCCs into the west coast refining systems.
Right. Okay. I mean, your view on this then, on this TMX flow, because we're getting a lot of questions on it. I get a lot of questions. Is it comparable? Is it competitive with a Gulf Coast crude? With it's a different grade. Okay, it's heavy, right? So
It's a heavy sour.
so it's comparable with an Ecuadorian,
Um,
Venezuelan.
I would say comparable to a Venezuelan, probably a Urals as well, maybe even a Basra.
Right. Okay. And so where the story just going in from? Okay, Iraq oil imports from Iraq into India declined by 20%. If India are buying this new heavy grade TMX, that's right in Iraq's wheelhouse, is it? There's a direct competition,
Well,
regardless of how close it is geographically as well.
it's a direct competition to not only Iraqi but also Russian because it is a heavy sour crude.
And
Um,
even with the price caps and, you're talking Venezuelan, if say you're talking Venezuelan and Russian, fraught with sanctions, fraught with issues, fraught with infrastructure problems and operational constraints, TMX being sort of tier one, if you like,
mhm.
is still competitive with those grades.
Well, you have to think that the TMX has to price to clear. because you have to get it out of Vancouver. And so it needs to price in order to make it go into other markets. Otherwise, it's gonna shut down the own pipeline because they can't find buyers. And so you do need to price it to clear. Therefore, it has to discount to cover that cost of not only the export premium, but also the lighterage cost to get it onto a larger vessel, if that's what happens, and then the transportation to its next port of call. I mean, I almost see the whole TMX export structure being a cascading effect where it flows into China, and then China backs out some of their longer haul crude, heavy sour crudes that they buy, and that just kind of cascades back down into India. So India then has a much larger portfolio to choose from because they don't have China competing for all those barrels.
And that would go into India. That would go cross Pacific.
Well, I would think more readily it goes cross Pacific into China versus
Yeah,
going into India, because I mean it's a long haul when you think about it from Vancouver to India. I mean
yeah.
across the Pacific, across the Indian Ocean.
It's a long way
To,
on a bloody plane, let alone a boat that goes 12 miles an hour.
yeah, yep.
Wow. No, I'm just looking at Indian imports from Russia of crude and condensate in April, 2 million barrels a day. And to put that into context, because we like context on this show, that's the fourth highest on record. It dropped down to 1.4 million barrels in December. But if you compare that to, let's say, April 2020, it was 251,000 barrels a day. So 8 times higher that they're buying now. You know, the trajectory was coming off. It peaked at 2.1 million barrels a day in May last year. And then April this year, it's 2 million, well, 1.979. But you could see the trajectory was going down and then suddenly it's going back up. Now, I mean, okay, rather than the what, we like the why, right? Is that, you know, the story this week as well, just sticking within this story, the story is this week as well is that China has started to restock, right? Crude stocks globally 11-month high. China restocked. Now, a lot of people kind of digest that and say, oh, that's a signal that flat price is going to go up because the Chinese are buying because they think it's cheap. I don't necessarily agree with that argument. I think it's just they have a chat. We need to buy some oil. Let's go and buy some. I don't think that there's a lot more complexity than that. Possibly there is, but a 500,000 barrel a day increase in imports from Russia by Indian refiners. What would you? I mean, that's a lot of oil. What do you attribute that to? Is
I
that
would
they
say
want to run the refineries more?
price. I mean, because obviously they must back something else out because again, they only have so much storage and only so much refining capacity. It's not like they have the 15 million barrels a day that the Chinese have. They have 5.6.
Yeah. I mean, I suppose when you look at it from that point of view, you know, if I just look at, you know, okay, Iraq was down, but Iraq, you know, the 3-month average is about 980,000 barrels a day that India buy from Iraq.
Mm-hmm.
In April, it was 1 million. February, it was 760. So, I mean, okay, it's down 20% month on month. But if we look at Saudi, I mean, okay, so we'll come back to this in a minute. But if you look at Saudi Arabia, you would have to be competitive on your OSPs looking at that kind of data, wouldn't you? You know, it's not just an OPEC meeting, but you're thinking India are a very, very important client for ours. 620,000 barrels a day in April, down 20% from March, which was 800,000 barrels a day. We've got to get that back up. The only incentive for India to do that is to be more competitive on OSP, no?
Yep. But it's also OSP on the right grade because it is going to be grade specific because it depends on what they want to do to maximize their internal margin plus their internal demand when you start looking at it from the refinery LP model.
Yeah, I mean,
So it's one thing to say, oh, we're going to cut our OSP, please buy our crude. But if they cut their OSP, say for Arab heavy, and you know, the refinery says, I don't want heavy, I want medium sour, or I want medium light. Okay, well, guess what? You're not going to be buying. You're going to be buying that when they cut the OSP. You're going to be buying the next cheapest grade of crude that gives you the right cut slate that you want to meet your market demand.
yeah.
I mean, I think the more interesting piece here is that if you've got ADNOC importing Basra, which is going to put more Burton Murban onto the market,
Yeah.
you know, where does that go?
Yeah, I mean that's the flexibility with the crude buying program that the Ruwais refinery in Abu Dhabi have. That what they were doing was instead of burning Murban for domestic use, they can buy um, the Basra heavy cargo, and that means more Murban's out because it makes more money, and that is the flexibility. That is how much that refinery can optimize. It took a lot of people by surprise.
Mm-hmm.
Um, I think that's a trend that could continue, but why not? I think they will do some possibly with Kuwait, but we'll have to wait and see.
But
Um,
but you think what that does though, it actually puts India into the big catbird seat because now
yeah,
you've got a lot of wider selection slate of crudes that are going to be, Murban should theoretically discount because there's more of it available now to go out to the market. Basra, I mean, I'm sure the Iraqis would love to be selling to ADNOC all day long just because that's an easy, steady trade that you can do, and you don't have to worry about geopolitical risk at that point. You can just shuttle tankers all day long and have a nice day. Um, but nevertheless, India now has the smorgasbord of crude to select from, to choose from, which is going to make it hyper price competitive versus refinery slate versus OSP numbers. And so it's just going to come down to, puts them into a nice buying position.
and do you think just going back to the original, buying the TMX pipeline because do you think that there's also some game at play here in that India are sort of saying, don't ever be complacent, that we will always be there to buy your crude, that we will look further afield if it makes sense for the slate that they want to run or price competitive.
Oh, I'm sure
It keeps
there's plenty
everyone
of
on their
that.
toes.
I'm sure there's plenty of that right now. I'm sure there's plenty of keep everybody. We're not just going to be the buyer, the slave buyer to you because you've promised us the world. They're still going to look at it from a price perspective. I mean, the Chinese are that way as well. Although I think the Chinese probably put a bit more geopolitical thought into what they're buying and how they buy. But nevertheless, price is still going to drive their decisions because they still want to make money. They don't just want to buy 100% Russian crude because Russia needs the help.
Yeah.
Um, and I don't think anybody wants to be taken for granted um, if they are, a buyer of material, especially in those
Yeah.
regions.
I mean, look, one of the big stories everyone was obviously discussing last week was what's happening with Dangote refinery. It's obviously a sort of I don't know what it's not a trophy, but it's like the world is looking at Africa with the Dangote refinery, and Naira dollar has been the best performing currency of the last couple of months, and Bola Tinubu's been in power a year, and made some tough decisions, but implemented the right policies, and the economy is growing, and Dangote is becoming even ever more competitive within the domestic market. Granted, it's not producing the right fuels yet, but it will happen. But what seems to have happened is that Nigerian crude is a bit of a dog, in terms of there aren't the buyers for it. People are losing money, and the OSPs are too high because obviously the government looked at it in in a sort of through these lenses that said, well, European refiners, you can't buy Urals, you need to buy more of our stuff. Increased OSPs, but the demand just simply hasn't been there. Um, I mean, what's the talk in the town about Nigerian crude diffs, not just about Dangote, but about what's happening with their material. Because reading lots of stories that there's some distressed Nigerian crude cargoes floating about the market.
Well, I mean, I think that's par for the course with Nigerian crude. There's always seems to be some parts of the last month program that doesn't get sold, and it sits around waiting for a buyer, and it finally clears and moves on to the next month's cargo slate, and then it just kind of keeps rotating over and over and over again. Um, you know, I think Nigeria is probably the best story out there when it comes to petroleum and refining,
Yeah,
because it is the liberation of the economy from being subject to European whims. in my opinion. I mean, you have the Dangote refinery. Yes, they're not producing gasoline yet. They still have, I guess, some issues with their hydrotreater or other units that are preventing them from producing gasoline. They haven't gotten clearance yet from PPRC, but they are producing gas oil. They are producing jet, and they are putting that into the domestic market. And they're actually dropping the retail price. Seems like every week they cut the price again and they cut the price again. And eventually they're going to force out a lot of the other importers because they won't be able to compete with the price that the local refinery can make. Now
Yeah, I mean,
you couple that with the startup of the Port Harcourt refinery, which is supposed to happen any day now, quote unquote. They said they've returned their, and now the NMPC announced that they're going to have the Kaduna refinery, which has been down for 8 years, I believe,
yeah,
up
yeah.
and running by the beginning of next year. So if you start bringing all this refining capacity online in Nigeria, plus you have the Sawinta refinery in Ghana,
Yeah.
um, you are changing the landscape of the Atlantic Basin when it comes to crude flow as well as product flow.
Yeah, you are. And then you've got the Dos Bocas refinery as well in Mexico, which disrupts Atlantic Basin balances as well. But yeah, look, I mean,
So it does put a lot of pressure not only on the European refining base, but also on the U.S. Gulf Coast refining base, because the U.S. Gulf Coast, a lot of the product is being exported into Mexico and Latin America.
yeah,
And if you start losing that Mexican demand because their local refineries are now running more efficiently, okay, now you've got to put the product somewhere else, and now you're competing with Russian product into South America.
yeah. No,
Um,
you're right. And this was really one of the discussions last week, and it's happening. It's clear, but it's a slow death. For a lot of the existing, not a death. That's too dramatic, and
well,
too
it's a
dismissive.
it's a realignment. I wouldn't call it a death. I call it a realignment. But even in this realignment, what have we seen happen so far this year? We've seen Exxon Foss get sold, as well as terminals to a consortium of people.
Yeah,
We've seen the Saras refinery get sold, which has been approved now by the Italian government. So Vitol will now be buying the Saras refinery. We've had two of the inland German refineries being said that they're going to be shut down fully in 2025.
yeah,
So you do have oil majors realizing that, okay, maybe it's time to realign how we manage our asset base and refocus on other things, because this big shift in the Atlantic Basin is going to be seismic,
yeah,
and it could create a lot of distressed assets in the world that also become non-economical to operate because there's no market for the product. I mean, can you
yeah.
imagine the day when a Euro 5 gas oil cargo arrives from Dangote into ARA?
Well, I think a lot of people, it would be like,
I,
whether
I
whether
would I would hope that day comes, because I would love to see that cargo
it
happen.
will, it will happen. It will happen. I think that people will probably use it as a bit of a lost leader to signify what you say, what it represents. And look, that's what I'm saying is that a lot of people who were down at the conference last week in Cape Town, wanting to keep their eye on so much going on, because there's so much the support network that is around the, say, Northwest Europe gasoline market in terms of brokers, ship agents. That business is gonna have to realign, like you said. But anyway, look, just before we wrap up, because it's been nice to talk to you after a while. Um, Interest rate day. What do we reckon, Jay Powell? I mean, you've always been the skeptic, and not the skeptic, probably ring true now. We're in May. Um, you know, we argue that if there's not an interest rate cut by June, there won't be one because of for the year, because obviously you're coming into election time. But it doesn't sit well with Grandpa Joe, all this high interest rate environment, does it?
Oh, it doesn't sit well at all. Well, I mean, I don't think it really impacts Grandpa Joe at all, because again, I've always been arguing that we're at the historic average interest rate.
Hmm.
This is where interest rates should be, around 5%. And because business should be able to function in this type of environment, which for the most part, that rings true in the United States. You don't
Yeah,
have a
they
bunch
are.
of failures. The,
Yeah,
the big failures you're seeing right now is in the banking sector, because of how many treasuries a lot of banks sit on, and they don't mark them to market, they mark them to maturity. Therefore, they don't have to show any impairment in value. But when people take a demand on deposits in a bank, the bank needs cash. It cashes in the securities. All of a sudden, they're losing money on these securities. I mean, you just had First Republic Bank in Pennsylvania go under receivership for the FDIC last week.
yeah,
Um, but nevertheless, it's almost like, we were talking about on the show how there's going to be no interest rate cuts maybe till mid 2025, but with the inflation data that's come out, there could be a potential 25-point increase, I would think,
No, it's
second half
mad.
this year.
I mean,
And
some of the banks here in the UAE, some of them have been increasing their interest rates. Now, they arguably they decreased them based on the fact that they didn't hedge, but had the opinion that the Fed would start cutting rates already, and now they're scrambling and sort of clawing back. One of the banks here put their interest rates up by 1% this week. So
that's good because it basically diversifies their capital pool from the U.S. Federal Reserve to the common consumer. I mean, somebody's going to pay you 1%, to use your money while you throw it into their bank. Happy days for you as the consumer. You're actually making 1% versus getting negative interest rates, which a lot of people were getting for having savings. And so
yeah,
all those negative interest rates when they occurred here in Europe just perpetuated people to go buy stuff, or because it's like, why do I want to have anything in any type of savings instrument when I'm actually losing money on that transaction?
yeah.
Um,
No, you're right. You're right. Um, yeah, look, let's see what happens. But I'm in Singapore next week, still doing my bit for jet fuel demand. That will calm down, I promise. Well, if my wife's listening, but she's not, then I promise it will calm down soon. But Singapore on Saturday. I'm back in next Thursday. We will record next week, live and direct from Singapore. But yeah, nice to see everyone. Labor Day. Do you reckon anyone's listening?
Oh, well, there's still, a whole bunch of people in Geneva, Middle East, and London.
100%.
They're
Don't
all
forget to
there.
like, comment, subscribe.
And
Exactly.
and last thing, happy Easter, all those celebrating Orthodox Easter,
Yes,
which is
absolutely.
this weekend coming up. So happy Easter to all of you as well.
Yes.
So like, comment, and subscribe. We will be back with you next week. Enjoy.
Ciao.